Good afternoon. Welcome to Monday, September 14th, the live 3:45 p.m. screen show. We did not do a 10 a.m. screen show because I was in a briefing where I got some very good information there. However, before I touch on anything like that, I just want to show you here. Currently, the SPY, we are down fractionally here, about a point. The number is a 95.02. We are getting into deep overbought. But the big takeaway from today, believe it or not, we are only turning with 15 minutes to go, 62.9 million shares. I mean, we are close to the low volume day of the year as we head into the Janet Yellen Fed interest rate announcement on Thursday. Just incredible that how the volume has just non-existent today, which means illiquidity, a non-liquid market. The Dow been hovering down here most of the day, down 75 points here, 95.58. The NASDAQ down 20 and change at a 96.48, and the Russell 2000 down 4 and change at a 94.75. So, as you may be saying to yourself, that's not a good situation heading into the Fed announcement on 30 to have these types of overbought conditions in the indexes. And you are absolutely right. That is not a good scenario. So there ain't no way that I'm going into this thing on the long side with anything. I'm going to be looking for the volatility, the UVXY, which is up today, 4.19. It's still a little bit lower than it was on Friday. If this thing can get down to 1 or lower come Thursday, I am all in on this thing here within a very bullish trade pattern on there. If you come right over here real quick, I just got to show you this because this is real. This is real stuff. We have two stocks of the S&P 500 components, Joy Global with a 1.56 and Coca-Cola Enterprises with a 2.04. This precision cast parts, we can't count that because that's being taken out. So that doesn't count even though it shows up there. Two stocks that are oversold out of 500 S&P components. I have never seen this before. Trust me, I've never seen this before, and that is never a good situation. Here's what the large caps looks like. Guess what? There's nothing here. Look at that, nothing. So there's absolutely no way, if you have any types of semblance of a risk management process, that you're buying stuff in this market on the long side. You just can't do it. You just can't do it. There is entirely too much risk involved in this stuff here. So forget about it. You can't buy it. If I would love to buy something on the long side and hold it for a couple of days, but there ain't no way with this type of an environment and what we're seeing here right now that anybody with any type of risk management process can buy this market here. Okay, what I wanted to mention, the big takeaway from the briefing this morning was the most likely scenario from the Fed. There's three scenarios, but the most likely scenario is this, that they are not going to raise interest rates, but they will maintain their hawkish rhetoric, something that they have been doing all year. If you recall back in March, they were going to raise interest rates, and they said that they were when they didn't, but they maintained their hawkish rhetoric. June comes around, they were raising interest rates, they remained hawkish, they didn't raise interest rates, but they said, well, okay, we're going to raise them in September. Here we are in September, they're not going to raise interest rates, but they're going to say, well, we're data dependent, we can do it in October, and we'll wait till December, blah, blah, blah. So their credibility is gone. However, I guess it's better than raising interest rates because that would just be catastrophic to the emerging market sector. So I do not expect them to be that stupid. I mean, they're stupid. I got to give them credit. These jokers are really, really stupid people running the monetary policy in this country. But, what can you say? stupidity is stupidity, and it breeds more stupidity, I guess. So I'm not looking for a rate increase, but I mean, I am looking for their hawkish sentiment, no question about it. I wanted to also mention to you here, now this comes from the BIS, which is the Bank for International Settlements. And they said if the Fed does raise its benchmark interest rate on Thursday, it will be against the advice of the Bank for International Settlements, which is the central bank of central banks. And they quote, debt ratios have reached extreme levels across all major regions of the global economy. Ambrose Evans Pritchard says of a new report from the BIS, leaving the financial system acutely vulnerable to monetary tightening by the U.S. Federal Reserve. Now, if you recall, remember I was talking about that $9 trillion of dollar-denominated corporate debt in the emerging markets? That's kind of what they're talking about. So you can't do that without causing a catastrophe around the global marketplace. So even the BIS is telling Janet, you better not raise interest rates. You're going to cause a catastrophe. So best scenario, no rate increase, talk tough, and that should continue to have volatility in the markets, should continue to have a stronger dollar, and should maybe keep the markets to the upside, or at least leaning to the upside here in the short term. And I do say short term because come 2016, whether it's the first quarter or the second quarter in 2016, the ball game will be over. It doesn't matter. They're keeping something afloat. And it's just going to end up falling on its own weight. So you heard that story of 2016. No need to repeat it. It is what it is. So that's what to look for between now and Thursday, and that's the scenario that I am looking at. So I wish I could give you some ideas on the long side of this market, but I can't. But if you're looking for some short ideas on this market, Apple 98.71. 3 days in a row, green on air. That goes extreme overbought tomorrow. So there's a short idea. If you're looking to short something to make some money, Apple is your ticket to paradise. For me, I want this one. If this can continue to move down over the next couple of days, that's going to be really in a sweet spot for a big move. Top of that risk range on the daily, 82.42 right now. 82.42. Mark that. Have a good evening. We'll do it again tomorrow.